How do I pay less taxes? A stock market strategy for taxable accounts. Hi, my name is Joe Cantu. So if the stock market has fallen, consider a concept called tax loss harvesting. Number one, it captures losses, and we say in the industry, use them or lose them. Losses will offset gains for the year. And if you don't use all your losses, you have loss carryforwards, it can possibly lower future taxes. Over a 10-year period, maybe this occurs 2 or 3 times a year. But there is a caution. The caution is the wash sale. And let me explain a wash sale. So if you sell a stock and you buy the same stock back in a 30-day period, you do not get to write off the loss. It's in the tax code. So you have to wait 31 days to buy back the stock. However, there's an alternative thought on that. If you want to remain in the same industry sector, for example, say you're in the energy sector and you own ExxonMobil. You could sell ExxonMobil and buy Chevron to keep the same energy position. And then in 31 days, sell Chevron and buy Exxon back. But that's a way to capture the loss and be able to use the loss. Because, hey, let's face it, it's possible that the account may move back up and then you will have gains. So you may need to use those losses to offset the gains for the year if you have a taxable account. I have some required disclosures. Any representation of stocks are for educational and entertainment purposes only, and do not constitute a recommendation. I do not provide tax or legal advice. Investing has risk of loss. You may lose money investing in the stock market, and consult with your own advisors for any financial decisions. Joe Cantu is a registered investment advisor in the states of California, Florida, Georgia, and Texas, providing pure independent advice and money management.